Good afternoon, everyone. For those of you who haven't found a seat yet, this is almost like church. There's always seats on the front row, and so you can make sure that you find a seat. Really great to have everybody here for our Agility, Innovation, and Agriculture event. This is a real wonderful opportunity for us to have these folks here to talk to us about innovation in agriculture. I also want to make a special thanks to students and faculty from the University of Lethbridge as well as the Lethbridge College, and also acknowledge so many of you who have come from the community to spend some time here with us this afternoon. For those of you who don't know me, my name is David Hill. I'm the Director of Development for the Southern Alberta Agricultural Program, which is a joint initiative of the University of Lethbridge and the Lethbridge College. So I get to have my foot in each camp and spend time on both campuses with faculty and students. I'm also the Director of Centers and Institutes for the university, so get to do a lot of fun stuff with the research centers that are happening here on campus. A quick word about Agility. As many of you may know, we've been working over the past year to create a program that provides our students with experiences that foster innovative thinking and support their entrepreneurial ambitions. And today is the fourth installment of our speaker series, and more events are in the planning stages. If you want to make sure you do not miss out on being invited to future events, there is a clipboard up here on the front that you can leave your name and email address, and we'll make sure that you get an invitation to our future events. The program has been evolving on our campus, and as of the 1st of March, we actually now have a full-time manager for the Agility program, Tyler Heaton, and I just wanted to have Tyler come up, introduce himself, tell you a couple things, and then I'll introduce the moderator. Tyler.
Thanks, David, and thank you all for coming out tonight. We really appreciate the support that you're giving the Agility program and the Innovation Speaker Series. I thought I would try and do this without notes, but I don't think that's going to happen. But I promise I will keep it short. Dr. Leslie Brown asked me to introduce myself because this is my first official event as the manager of the Agility program. And so I'll keep it short, just kind of give you an introduction. So I'm actually from Southern Alberta. I was born and raised here. Grew up most of my childhood playing in hay bales and threshers and swimming in the Belly River, southwest of here in Glenwood, Alberta, so that's dairy country. And I'm also an alumnus of the University of Lethbridge. I just recently graduated. Now, when I say I recently graduated, it took me about 6 or 7 years because I was working full-time here as well. And so I'm proud to be from Alberta, from Southern Alberta, from the University of Lethbridge. I've worked in post-secondary for about 15 years, and at that same time, I've run a small business. So I guess I could say that agriculture, innovation, entrepreneurship, and education are all really close to my heart, and I felt like it's a really good fit with the Agility program. I'm happy to be a part of it. I also want to mention that I think the Agility program is a good fit for the University of Lethbridge. We have a strong liberal education foundation that really enables our students to take a broad approach to their learning and really be exposed to a broad range of topics and expertise. And I think this opportunity leads to new ideas and recognizing new challenges. And at the Agility program, we think that we'll provide students with that opportunity to apply what they're doing in the classroom to multidisciplinary projects that are going to really expand their learning. And we hope that they'll develop skills and have outcomes that are both creative, economic, and socially benefiting outcomes. We think it's an exciting time for the university, for our students, and for the community. There's a lot of growth going on. There's a lot of opportunity happening. Never before have we had the kind of access to tools and expertise that we have now, and we're really thankful for our panelists and our moderator for coming to speak to us today to talk about the innovations that are taking place in agriculture and agribusiness. So we're glad you're here, we're glad they're here, and I'm going to turn it back over to David.
Thanks, Tyler. It's now my pleasure to introduce the moderator of our panel, Mr. Tom Burke. We want to thank Tom for all of his efforts in pulling this incredible panel together. We're also really thankful for the ongoing advice and counsel, encouragement, and pushing we get from Anil Pereira who's advisor to our agility program, and thank him for always keeping our feet to the fire on moving ahead. Tom's a senior investment advisor for Canaccord Genuity Wealth Management. We brought him here all the way from Montreal. That's a great thing to do. There's lots of fun things. I love Montreal. I love to go to Montreal, but I like to have people from Montreal come out here and see that this is actually a cool place. So.
Just wait till you hear what I have to say about my mayor. So
Okay, yeah.
you gotta get that out of our system, right?
That's right. So without further ado, I'm going to pass the mic to Tom so that he can kick the panel off. It's been great having conversations with Tom over the last couple of months as we got ready for this. I find him to be enthusiastic, engaging, frank, and I think we'll really enjoy what we're going to see from the panel. So, Tom, over to you.
Great, thank you very much, David. Yeah, I just want to thank everybody. Since I landed here yesterday, I've just been blown away by the hospitality of everybody, and it's just been great. Coming out to Lethbridge, typical Quebec snob, right? You think, oh, tiny little town, Lethbridge, etc. And this place is a lot bigger than I thought. And let me tell you, the university, it's just like a little city here. It's just brilliant. And I also want to acknowledge my good friend, Anil Pereira, because you're probably wondering, how does a Montreal investment advisor come to moderate an agricultural panel? Like, that's a huge question, right? So it turns out that Mr. Alumnus here, Anil Pereira, we go back to when we were 12 years old at Loyola High School. And you look at all three of the four conferences have been, the speakers have been from, guess what? The same place in Montreal, the same high school, Loyola High School. And I got to thinking about this. I said, has Anil made any new friends since high school? I just like, wow. So, looking at that, Jesuit education that we had, and you think back, a few generations ago, well, we'd all be missionaries doing work in Africa and stuff like this. Instead, now we're here, and all what we do is Jesuit kids, we come out and speak at the Agility Series. So I want to thank you for that. And it's just been, so far, a great experience. But, and I just wanted to, about our mayor, Denny Coderre, I guess you guys have heard what he feels about the Energy East pipeline. But we've got a strategy. I've been talking with Brad Farquhar here from Input Capital, and we're going to get a deal done with Mr. Coderre. We're telling him that we're going to be shipping canola oil out to Montreal. And you got to ask yourself, is he going to know the difference, right? Not a chance. So anyway, Mr. Coderre, we all, listen, I got to tell you, the other thing is I played hockey at St. Francis Xavier University back when they allowed small goalies to actually get in nets at the time. And I came out to Medicine Hat for a 3-day tryout. And let me tell you, the one thing first of all, it was quite a culture shock. I mean, these are tough farm boys, and that's when I learned to respect sort of the whole farming aspect just by getting on the same ice surface as these guys. And I have to tell you, one of the kids, he looked across at me, says, I wish you'd paint your mask like Pierre Trudeau's face so I could blast it at your head. So that was my first love affair with Western Canada. And it was right back out to St. Francis Xavier University with my tail between my legs. So anyway, that's kind of my Western Canadian experiences. So what I'm going to do is, we're looking at a few themes at Canaccord and amongst my clients anyway. And I just want to, there we go. So, I just wanted to address these themes. I did a whole PowerPoint presentation. We're not going to get into that because we obviously have these extremely important panelists here that you've got to hear from. And but when you're looking at the investment markets, there's our little investment disclaimer. I got to be surrounded by regulatory bouncers from time to time because of all the regulatory needs in our industry. So 3 themes. As an investor, that we're looking at in a global perspective that is really kind of, I think, very thematic, very timely things to look at right now. And obviously one is the Argentina election late last year. We've got finally a pro-business government that was elected in Argentina. And, what that means is total elimination of export taxes on agricultural produce. We're talking corn, we're talking wheat, we're talking soybeans. And so we're talking about 30 million tons of more grain coming out into the global markets with this, what we call, what I like to call it anyway, kind of the agricultural monster from Argentina, right? And so they are a very, very big swing producer in grain and agricultural production on the planet for sure. The second theme is obviously this is the year of the Pulse 2016, and for those of you who don't, you think about this this country, you think about $100 billion of GDP in agricultural production, and you think about the stock market champions, and I want to take out potash and agrium out of the equation, and we don't really have that many champions in agriculture as an investor that we can say, yeah, this is the emblematic Canadian company that we should really go after and sort of have all in our portfolios. But there is one interesting company, obviously, that you may be familiar with, AGT Food and Ingredients. And they've done just a fantastic job. This is a company that I think went public in 2002. And just 14 years later, they are now an $800 million powerhouse player in the pulse industry. And their next big move, obviously they've been making acquisitions through the whole supply chain. They own a huge pasta processing assets, even as far off as Turkey. And as a matter of fact, I think, Brad, they've thought about or have discussed openly about setting up pasta production in Saskatchewan. And that's still a live discussion, I believe. So very interesting stuff. And, of course, also the next phase is in the ingredients. And when you get into pulse ingredients, one great example is pea starch and just the margin that a company can extract out of getting into that value-added exercise. You're talking about a doubling of gross margin overnight from the basic commodity processing and exporting of the product. So very, very interesting stuff. And then, of course, something that I hold a little bit dear to my heart because our investors had such great success with Brad's initial venture in Assiniboia Farmland and the whole Saskatchewan farmland ownership discussion. I'm sure a lot of people have opinions about that. I've got my own opinions about it as well. I think it's a great diversification asset class for those of us that have to deal with day-to-day stock market volatility. There's no question about that farmland, if we could democratize the asset class, if we could, have, openly traded REITs out on the marketplace that average investors could put into their RSPs, I think it'd be just fantastic. So those are my kind of three themes, and if anybody wants to share, exchange emails or whatever, I have a full PowerPoint sort of making the investment cases around that. So with that, we're going to move over to the introduction of the panel, and to my left, and guys, no laughing allowed, okay? So to my left, right here is Graeme Lempriere, Clean Seed Capital, and by the way, this is kind of a historical moment because we have two publicly traded companies for the first time speaking at the Agility Series. So we can mark that down for historical context. We've all heard of the hip-hop performer Pitbull, but in the junior public markets, we have our own emerging company CEO who fits the description as a pitbull because of his tenacity, focus, and irrepressible crusade to communicate the mission of Clean Seed to the public markets. On September 26th, 2011, Clean Seed completed their IPO on the TSX Venture. 6 months later, the company, in collaboration with UBC, made the following announcement. Clean Seed has developed an advanced no-till precision planting system comprised of individually patented technologies. And at the time, I believe, Graeme, right or wrong, it was sort of destined for kind of emerging markets. Okay, good. And then just 4 years later, the evolution of that portfolio of patents has set the stage for the full commercial launch this year of the CX6 Smart Seeder, the world's first and only smart seeder, and is a breathtaking piece of machinery fully loaded to help implement the best-in-class precision ag practices out in the field. So that's Graeme, and I also want to introduce on the far end here, Brad Farquhar, another person that I've done probably about, I don't know, 20, 25 dog and pony shows with over the last few years. And Brad's ag journey started in 2005 as co-founder of Assiniboia Farmland, where for the next 8 years they put $54 million to work buying high-quality, undervalued Saskatchewan farmland representing retail investors across the country. As a personal testimonial, Brad and partner Doug Emsley came to our offices and they gave us the pitch in 2010. Our investors bought into the deal, and obviously they liked the idea of the diversification, which I've just mentioned. And 3 years later, fast forward, Assiniboia was sold to the Canada Pension Plan, and folks doubled their money. Now, after that, after that investment success was parlayed into one of the most successful IPOs in years, Input Capital was born in 2012, and when they went public in 2013, the stock, I think the first trade, Brad, was up 60% in the markets. So that was a great intro into what we call canola streaming, and obviously that message and that business model resonated tremendously with investors, and to this day continues to be the case. Now, somebody I just met about 20 minutes ago, Mr. Wade Barnes. Wade, you co-founded Farmers Edge in 2005, and I haven't met you before, so I don't have really a lot of information, but I think the people around here, obviously, because you've made a huge impact on the local community with what you're doing with Farmers Edge. And I have to just, like, when I came here and I heard about Farmers Edge being one of the panelists, I thought, oh, isn't that cute, small little company, not doing that much, we're going to let them get up on stage and talk, all that kind of stuff. Then I investigated and I'm like, wow, 275 employees now, and you guys are on 4 continents? Unbelievable. And one of the interesting things that you had mentioned was this kind of secret sauce, or the ability in dominating your service, dominating what you call data sparse geographies, correct? And so that obviously that was something that resonated with me, and I thought it was obviously. There's some investors that think that you guys are really onto something because you've been able to secure $60 million of private equity funding, which is quite staggering, quite frankly. So that's your panel. And what we're going to do is start up with the general questions, and we're going to go around the bend with, and we'll start with Graeme. And this is a general warm-up question, and it revolves around where agriculture has evolved, say, in the last 5 to 10 years, and your kind of thoughts on that, and like to get, what your impressions are as to what that evolution has looked like, and what has made the most impression on you in terms of the evolution of agriculture in the past 5, 10 years. Nope.
I'll just take yours.
Yeah.
Or maybe I should turn this one on.
Yeah.
Turning it on will help. I think that works, yep. Just to go back a little history, I'll go back further than 5 or 10 years. I always like to go back to the original invention of the mobile plow. It was developed by John Deere over 100 years ago, and that really started modern mechanization of agriculture, primarily in the United States. And we learned how to produce 4, 5, 10 times the amount of crop production that we used to, because we would turn the land and till the land and apply our seeds, and the world started feeding itself more and more and more. And as the years went on, that land started to play out, and the resources and the natural biodiversity started to disintegrate. And then we entered into the era of the Dust Bowls. That's a very famous piece of history where the United States was a dust bowl for decades due to the devastation that was created by plowing the land. So then scientists, engineers, entrepreneurs, students all started looking for alternative ways to address the issue. So they started looking in the late 60s, 70s about no-till. How can we start addressing this land issue and the land degradation problem? So they started looking at no-till farming techniques. And then they started to run into offset challenges of weed control and how do we control weeds. And we've been evolving and evolving and evolving over decades. We're constantly inventing and innovating to address challenges. So when you move into the Canadian marketplace, we used to do very small fields, and they've got bigger and they've got bigger and bigger. As these fields have become more commercialized, they've now expanded into larger and larger equipment. And in the 80s, early 90s, we saw the introduction of the air seeder. And the primary driver behind the air seeder was to put down as much product as you can on the widest width that you can and put as much in the ground as you possibly can do in the shortest amount of time, because you have a very short window to put the crop into the ground. Huge boom. FlexiCoil came out, and Case bought FlexiCoil, and various inventors that on the ground in the agricultural space started to diversify ideas and come up with different models of air seeders, but fundamentally they were air seeders. And then as it's evolved, they've got bigger and bigger, and the tanks and the hoppers have got larger and larger. They're now out to 1,000 bushel tanks. You need massive tractors to pull them. There's soil compaction. So as we saw in the Dust Bowl era, we're now starting to see challenges of air seeders. One of the primary challenges of the air seeder market that we're used to today is agronomy has now become more advanced than it's ever been, invariably due to people like this gentleman right here that have now started to understand the science behind what's in the ground. The biodiversity, the nitrogen contents, and so forth, they're now being able to actually document and put together these input recommendations for the farming community of how to maximize their yields on farm. But as the agronomy's evolved, it's starting to show the shortfalls of the air seeder business as a whole. The air seeder business meters seed from a tank, and it blows it down hundreds of feet of airline at very large velocities, stressing, straining seed, traveling across the width of a drill, and then it places it into the ground. It is absolutely impossible to micromanage and control the input from one end of a drill to another, especially if you're talking about 100 feet. So as we started to evolve our company that started from developing technologies for the developing nations world and started moving up, we started looking at metering issues and challenges being faced by these air seeders. So we embarked on a campaign 4 years ago to develop a whole new approach to putting the deliverable product into the ground. And we developed what is now called the world's first smart seeder, the CX6. What the CX6 does is it micromanages up to 6 products on every single opener of the drill, which gives it the ability to execute the agronomy recipes that are now being recommended by these companies. So we can actually take 6 products directly over the opener, and each single one of these is controlled by electronic stepper motors. It's controlled wirelessly through your iPad. The recipe these gentlemen create goes into the iPad, it translates it to the drill, and the best way to describe it is it's the world's largest printer. But it doesn't print ink, it prints inputs. And the reason why this is important is to be able to give the farmer the ability to unleash the power of agronomy, to be able to put exactly what you need in the ground on every single foot and every inch of the field. When you look at a farm, you look at the field, it looks green, it looks great, it looks like your yield is fantastic till you walk in your field. When you walk in your field and you look down and you walk along the field, you'll see plants, stems, space, gap, because you can't control the surge of airlines. So what we've done is, with the help of the University of British Columbia, the help of IRAP over there, who supported our electronic development program, is we surrounded ourselves with the smartest people we could outside of the agricultural field that was in the auto industry and the power industry, and found a way to micro-control metering across the width of a drill with less than 2,000 watts of power. So this year, we're proudly unveiling the production models into Canada. We're starting with the first 12 that are going on demonstrations across the country. And we've received several patents on it. And you're only as good as the team that you have. We have an exceptional team. And a lot of them are young minds like that are in this room that have innovative thought and are creative, and they put their ideas to work, from apps to electronics. All the technology you see today in our televisions, cars, you name it, can be applied in any field. And we feel that agriculture has been left behind. We're now on the cutting edge of that, and we're just now coming to market. And it's a privilege to be here with all of you and to share our story. And we're happy to answer questions as we go along. But that's our story, and that's Clean Seed.
Sounds great. Man, I told you, he's a pit bull, right? I mean,
Oh, I'm sorry.
yeah. Wade, over to you.
Hear me?
Yeah.
So thank you very much for inviting me here today. It's really exciting to be in LeftBridge, and obviously LeftBridge is very dear to our heart at Farmer's Edge. I guess a little bit about our story. I mean, essentially, I'm a farm kid from a small town about 4 hours northwest of Winnipeg. I come from about 700 acres of cropland and 200 cows. So I really got my start as an agronomist working for a local co-op, and so when I started, we had 4 farmers who were, some of the most leading edge guys in our community. 2 of them past presidents of the Manitoba North Dakota Zero Till Association. They decided that they were going to get into precision ag, and they were the first farmers at the time that we knew of that bought yield monitors in Western Canada. And then they went to my boss and said, by the way, we're your best customers, and you're going to build us a correction tower. At the time, we didn't know what a correction tower was, but and that was to give a signal so they could log yield data. And then they said, this kid is going to go sit on a committee, and we're going to, everything we learn from this precision ag side of things, he'll take back to the rest of the farming community. So it was an incredible learning experience around sort of the very initial stages of precision ag. Unfortunately, precision ag didn't work out all that well that first stage, and we quickly learned that we were spending about $50 an acre to get a $10 an acre return, and very quickly precision ag became more focused on GPS units that made the tractors drive straight in the field. Similar to the evolution that you're talking about. And so fast forwarding my ag career, I was lucky enough, I worked for a big independent crop inputs dealer along the Manitoba, North Dakota border. I went down to a meeting in North Dakota where they were using satellite imagery to find high nitrogen spots in fields. And so had a bit of an aha moment, came back with the idea that we were going to find a way to kind of drive our custom fertilizer application business. And so we used satellite imagery to create zones and build a prescription map for farmers to go out and apply fertilizer on. And what we learned out of that is generally a lot of the farmers had the technology already in their tractor cab, and we sort of essentially connected the dots for them. So in the early stages, we were truly more of a consulting company. We went out, worked at about 5,000 acres, and we saw an interesting thing. We saw yields go up, and we saw fertilizer rates come down. So we got excited, the farmers got excited, but unfortunately the people that I worked for who were in the business of selling fertilizer were less excited by that. And so you could call that a career-limiting move. So so we went out and essentially started a business. I kind of say that we're kind of the oldest startup. We've been operating since 2005. We worked with 20,000 acres, a dozen growers, and we really just kind of grew, to a certain degree, word of mouth. And then we went out, and in 2012, a significant thing happened that I think really changed the industry. Monsanto, who we all knew was a giant seed genetics company, all of a sudden went out and bought a company called Precision Planters. And from our view, we couldn't understand what that move was about. Why would a genetics company buy a precision ag company? And we knew of this company. We actually thought the company had a lot of similar aspects to what we were doing. But we quickly realized that these giants in the industry were suddenly now coming into our arena. So we went out to go and raise some capital, and didn't really know how to do that, and ended up ran into an Alberta firm called Avrio that we raised our first chunk of money and allowed us to kind of grow our business. And really from there kind of converted from an agronomy consulting company where we started to kind of build software. And we just sort of evolved. At that time, we built software using other people. It was not internal. We didn't have any developers. We would just go and talk to people to help us build that. And as we moved along and we grew the business, and suddenly another significant thing happened, that Monsanto bought another precision ag company. They bought a company that was focused around weather and analytics and big data. And so at that time, I didn't understand. I didn't know what big data was. I didn't really know how it impacted agriculture. I certainly, didn't know what Monsanto was doing with it. They spent over $1 billion. And from that point on, they've probably not only bought they've acquired precision ag companies spending well over $1.5 billion, but they've also invested, close to $1 billion. And so from that, we understood that we needed to move. We went out and raised another amount of capital, but this time more of a focus around data and information. And we started to think through what the reasoning was, and similar to the clean seed side, is that we truly believe that if you have good information and data, you can make good decisions on the farm. And what we believe is that Monsanto is believing that a lot of their genetic material is starting to cap out, and they need to find different ways in order to get higher yields. And what they've realized is that if they can essentially match good management and the right genetics to the right fields, there's probably another 15% yield potential trapped into the specific seed genetics that they have. And so our focus is, as a company, is that we want to be a viable alternative to Monsanto, not just here in Canada, but globally. And so what we learned is that a lot of the technology that's been being created in Silicon Valley, in the US, is very focused on the 6 or 7 corn states where there's a ton of public information. And what I mean by public information, soils data, weather information. But what we find is that they can't really operate that well here in Canada or North Dakota or Australia or Russia or Brazil. And so really where Farmers Edge is sort of eking out our niche is to be able to operate, provide a precision ag solution, compete against the Monsantos, the DuPont pioneers, but really focus on a data sparse environment where these folks can't operate in. So so my view of where I think agriculture is going, big data and information is being used in all other sectors. It's being used really effectively. And we think that at the end of the day, if you can use the farmer's information and build a tool that helps him make better management decisions, whether ensuring that he picks the right variety or sows at the right depth or uses technology the right way, uses the right equipment that has the best fuel efficiency, they're only going to make their farms better and more profitable. And so that's our focus. Again, we're the strongest part of our market is Canada. We're very quickly expanding out into Eastern Canada. We're touching over 10 states in the U.S. We're active in Brazil, New South Wales, and in Eastern Europe. So having lots of growth. We expect to grow more. LeftBridge is sort of the center of our brain trust here. It's incredibly important to us, and there's been some key people in the room that's really brought us here and developed that. Kevin, Dale, some of the folks from IRAP. It's exciting for us. I think as a company, as we took a Silicon Valley investor, the first thing that they said to us is that you need to get a Silicon Valley office and you need to go out and hire a bunch of Silicon Valley talented people, because there are no smart people north of the border. Certainly no smart people in LeftBridge is what they told us. And so I think it's kind of unique.
More snobs, right?
Very unique for us is that we feel that in a very short period of time we've assembled, Kevin's assembled a world-class team right here in LeftBridge that not only competes with what Silicon Valley has to offer, but it competes with Monsanto, DuPont, Pioneer, and we believe that we're winning. So again, really excited to be here, really excited to be at the university today. So.
Great stuff. And we're really excited to take you public soon one day. And with that, over to Brad and talking about how we can sort of finance all these initiatives. And that's a perfect segue into your story over at Input Capital. So fire away.
All right, thanks, Tom, and thanks everybody. Thanks for the opportunity to be here. So, you know, the story of Input really goes back. I mean, I'm a finance guy. I'm not a farm guy. I'm a teacher's kid from suburban Toronto originally, and I found my way west to go to school after high school. And fast forward a few years, I was living in Regina. I was working in politics, and I was, as we looked at policy, I was the executive assistant to the leader of the opposition, and we were looking at agriculture policy. He was a farmer and a rancher, and as we drove around the province, I would debate him all the time about why, you know, we'd go to these farm protests, and farmers wanted help, and I'd tell him all the reasons why agriculture was a terrible business, and you know, we'd go through the numbers, and I'd say, why would you do that? You know, there's so many other opportunities. So it's ironic that I find myself here in agriculture today, but it was driven by a policy change that happened in Saskatchewan. And so in 2003, the province changed its farmland ownership rules to allow non-Saskatchewan residents to own farmland in the province. And there had been a long-standing decline in the value of land because farmers were finding it unprofitable, those at the margins were getting out of the business, and people were leaving Saskatchewan and rather than moving to the province. And so the pool of potential buyers was shrinking. And the province recognized this and changed the policy. And so a business partner and I saw an opportunity that because land values had fallen so far, and now the market, the number of potential buyers had gone from 1 million to 35 million, that likely the land value should begin to increase. We didn't have any kind of view about whether farming would be good or bad. We just knew that land values couldn't get much worse and that land was cheap. And so we decided we would start to buy land, and we raised money from investors to do that. And that went very well, and Tom talked to you a bit about the story. Our original investors more than tripled their money over 8 years, and it was a fantastic story. But along the way, renting land to farmers, we got a window on how farmers thought and financed themselves, and that's where our finance brains went off. We were used to raising money from investors and on Bay Street and across the country, and in 2007 and 8, when commodity prices went to the moon, you'll remember oil at $148, canola was $15 a bushel, but fertilizer was off the charts. And we saw farmers cutting back on their fertilizer applications just to control their costs, even though canola was at a record price. And that didn't make any sense to us as finance guys. But when we looked at what our farmers were doing, they were limited by their working capital. And it's a constant challenge for farmers to sort of stay on top of their working capital because there are expansion opportunities that come along. The demographics of farming are such that only 1 in 3 farmers has a real successor. So the other 2 farmers need to sell to that 1 in 3 neighbor's kid when he takes over. And so there are all these expansion opportunities. Mom and dad want their money out to retire, and how does Junior finance expansion and buying out mom and dad and all these new fancy seeding technologies and all this new technology that he likes, but isn't quite sure how he'll afford. And usually what will happen is the land comes up for sale next door, and you know everything's been good, you've made money for a couple of years and you've got some money in the bank, and land comes up for sale next door, and they run down to the bank or to Farm Credit and take their working capital and set it on the table and say, here's my down payment, I want that land. And then they go home and to try to figure out how to make it all work. And they've got more acres, more inputs required. How are I going to make this work? And so where Input Capital came from was an exploration of how in still an ownership-constrained environment, because in Saskatchewan and Manitoba, public companies can't own farmland, non-Canadians can't own farmland, and they can't be shareholders in anything that touches farmland. And so in a normal business outside of agriculture, a business would look to venture capital, various kinds of debt, maybe go public. There are a variety of financial tools available to companies in other sectors that weren't available in agriculture. And so we tried to come up with something that where investor capital, Bay Street capital could come to the farm gate level and facilitate farmers and their working capital needs in a new and innovative way that would fit all those rules, but that would also appeal enough to investors to put their money in and to farmers enough to actually play. And that's where input capital came from. We took a business model from the mining sector called streaming. And it's, in essence, if you found a gold mine or a gold deposit in your backyard and you didn't have the money to develop that deposit, you would sell more shares and dilute your position. You would take on a lot of debt and potentially destroy your balance sheet. Or you might sell the deposit to somebody else who would develop it and give them the opportunity. Or you might do a streaming deal with a streaming company. And what the streaming company would do is give you the $50 million or whatever the amount is you need to build your mine in exchange for a percentage of the production from that mine over the period that the mine exists. And so we adapted that a little bit to work for farmers. We provide an upfront payment to farmers. It averages $500,000 to $1 million. And in exchange, the farmer commits to deliver back to input about 10 bushels an acre of their canola production. It's about a third of their canola. And basically it's the farmer securitizing a portion of his production to get capital today. It's not debt. We're not lending them money. We're giving it. We're basically buying canola for multiple years in the future at a discount for cash today. And so that helps that farmer backfill that working capital that he just plunked on the table down at the bank, or buy his inputs on a different cycle. You know, there's seasonality in canola prices. They're highest in the spring and lowest in the fall at the time of greatest supply. So we always encourage farmers, don't sell your crop off the combine, hold it for a few months and sell at a better price in the future. Well, yeah, I've got bills to pay. Well, we can help fund that. Fertilizer is most expensive in the spring rather than 6 or 8 months beforehand. And the farmers with deep pockets are buying fertilizer for next year in July. Well, all their crop is in the field for this year. And so our capital goes into the farm to help turn that on its head. Buy your fertilizer when it's cheapest, sell your crop when it's the most valuable. And if you do that, and you do that consistently year over year, you apply a little better agronomics and you maybe upgrade some of your equipment, you're going to get much better results. And the compound effect of that over time will leave you much better off than you would be by yourself. So that's input capital. And that's how I came to be an investor in the ag sector. I'm going to add one more thing just to the trend thing, Tom. I'm an advisor to a company called agfunder.com. It's a Silicon Valley-based, basically online portal for agriculture investing. And we exist to put investors with agriculture projects, either private, usually before they go public, these are private rounds primarily for angel-type investors, and that's getting easier and easier in the U.S. with some changes to the regulations. And what's amazed me in my involvement there, the deals that are coming forward, and I guess if there's any kind of trend, it's sort of the tech trend in agriculture is incredible. Graeme talked about how farmers would invent new equipment in their shop, but now it's techies inventing new ways of applying tech to agriculture, and we've heard a lot about that here. And there's an amazing amount of things going on out there that are really exciting and interesting. Some of them are small scale, some of them have huge potential. And you never know what's going to come from these things, but I think we're just seeing a thin slice of what's to come. And maybe, Tom, that's some of your potential deal flow for your clients as more and more of these companies grow in profile and maybe go public.
Yeah, I don't think you even spoke to me about this. This is happening live right now.
It's a secret.
Yeah.
But it's out now.
Okay, quick run around about maybe some specific questions because each company has specific personalities and interesting challenges. So, Graeme, pre-revenue company, obviously there's been a lot of buzz about the CX6 seeder for quite some time now. And you carry, and this is quite amazing, you carry a market cap, I guess it's close to $30 million. So, which says something very interesting. It says something about the level of sponsorship that you have and the type of sponsorship. And this is one of the interesting, secret ingredients about how to keep a publicly traded company in kind of good shape, if you will, in good hands and not being in a place where you have to dilute at low prices, etc. So what I'd like to hear about, and I'm sure the folks would like to hear about the secret of, you know, how did you get to that point where, like, it is quite an accomplishment to have achieved that at this stage, even though you're still pre-revenue.
I think part of that is always execute on what you say you're going to do. When you tell a client or an investor that you're going to reach certain milestones, reach them. Actually keep reaching your milestones. But one of the key cornerstones of our success, if you will, from an investor's perspective, is who we chose as investors. And 40% of our shareholder are the farmer. And she is a great investor because they understand what we're doing. They recognize the benefits to the farm. They want to be involved in hedging the future of agricultural equipment, and they're loyal. They're not in it to trade and flip for a 20-cent lift or a 25-cent lift. They're committed to what you're doing. So I think part of it is the shareholder base that you have, and keep moving forward. Do not go stagnant. Keep exercising your program and deliver on the growth of your business. Granted, it's a non-cash flowing situation, which that's about to turn as these new machines show up, but you got to communicate with your shareholders and make sure you get the right shareholders. You got to pick the right investors that are committed to what you're doing for the long haul.
That's great. And Wade, obviously, just hearing your story about having to employ people like on a very rapid sort of tempo here, and the idea growth is great, right? But with growth comes challenges, and you're just you're going through that right now. And is this something that is a bit surprising to you, and how to manage, and how do you get through that? Obviously, you have some pretty powerful investors behind you, and there's a good side to that, but I'm sure there's a little bit of careful what you wish for as well, in terms of keeping everybody happy. So what is managing super high growth and the challenges? What's that like?
I mean, it's different based on the fact is that I used to call all the shots all the time. I have a board now. I work for the board. That took some getting used to, and the more money you bring in, the different investors that come in, and you manage a board. I'm the largest common shareholder, but I'm only a common shareholder. So took some adjusting. The secret sauce to the company in the early stages is that if Wade saw a great idea, Wade just went and did it. And sometimes it was good, sometimes it was bad, but I kind of, the one that I had to answer to generally more was myself, and today it's different, and so, part of the strategy is, we're raising capital, we're spending lots of money, and so a big part is that you kind of think it's odd is that we went out, we were a profitable company before we had a change in vision, and the vision of growing, so we raised a bunch of money and to go out and going from being profitable to not profitable, and we won't be profitable till for probably another year. Part of the strategy, but it's a different view of what you need to do. I mean, our goal is that we're competing against. We don't, 3 years ago we felt we competed against AgriTrend or Decisive Farming or the local Cargill guy or the retail agronomist, and we actually don't view them as competitors anymore. We actually see them as potential clients. We see our main competitors in the space is Monsanto and DuPont Pioneer, and for us it's a race, so we have to move faster than them. We have to be more agile than them, and so you raise capital, you grow, and essentially establish yourself, because David and Goliath is who we are, but David can win, and we view that if we can be really focused and have the right people around the table, we can do that. So that, I mean, for us, like you say, we're it's taking the page out of technology companies in other sectors and sort of writing that into agriculture, and like you said, it's a wild ride at times, and part of, I think, even the challenge too is taking people that are large investors that don't really understand agriculture, and you know this probably better, both of you, and breaking it down for them. I mean, the one thing that's pretty exciting to me is that I thought that agriculture or a farmer would be so different from one region to the next. And the one thing that I've learned is that a farmer is a farmer is a farmer. And whether he's a farmer in Canada or Brazil or wherever whether they farm, 2,000 acres or 200,000 acres, they approach business in a very similar way. So I think we can, because we're farmers, we can sort of connect with them. At times, it's always a struggle to make people who are used to investing into companies like Uber or Facebook get and understand agriculture, because agriculture has its own culture. It is different, and I think probably every company always says, well, if I was a startup in oil and gas or mining, or we'd probably say, well, my industry's different, you don't understand it. But truly, agriculture is a different beast unto itself, and I think that that's a challenge, but it's also an opportunity, because the people who understand it better will have more success. So.
And that, Wade brings up a good point about, the investment community not really knowing too much about, and I often thought, is there one analyst on Bay Street that has any sort of real family farm experience? I mean, that's probably...
Well, I can't think of one.
I haven't thought about one either. So
there's one investment banker in all of Saskatchewan, and he comes from a farm background.
Yeah, Jarrett Bodie.
Jarrett
correct.
Bodie.
Right.
But I can't think of any analysts on it. There's a few analysts on Bay Street who, they'll say they know farming because they're from Winnipeg, but that's about as close as it gets.
Well, so therein lies the challenge, right? So, because, and we should talk. So when things don't go perfect. And in any growth company, you're going to have a little slip up, and you've recently had some challenges with some farmers going a little bit offside on you. And of course, everybody that's in love with the model, the concept, the idea comes in, it's the hard hit of reality. And, you two guys as public companies are probably and I'm not saying that just in front of everybody to butter you guys up, but you've won an award in investor relations, and if you go on YouTube and you see what Clean Seed is up to, I mean, you guys are just like constantly communicating information about your stuff. So I mean, you guys are first class in communicating to investors, but at the same time, they get that disconnect, right? I mean, or they don't really understand really what it is you're doing. So how do you manage that challenge? And obviously, it's a big thing for you guys.
Sure. It is a big challenge. It's one of the challenges being, a public company. But definitely on Bay Street, there's not a depth of knowledge about this sector. And it's because Bay Street hasn't rubbed shoulders with the ag community in this country for a long time. I mean, Tom talked about how there aren't very many public companies in ag, and that's very true. And even some of the largest grain handling companies are private companies, and they don't rub shoulders with Bay Street very much. And now Viterra has sort of been absorbed into Glencore, so there's one less window on the industry. And so that's definitely a challenge. And what Tom was talking about is, we had a couple of bad accounts turn bad last fall, and when we announced that, there was $18 million that we had at risk, and our market cap was taken down overnight by $100 million. And that happens in streaming companies and in royalty companies. When something goes bad, usually the negative impact on the stock is 2 to 5 times what the actual value of what the loss might be. Now, it won't be a loss for us because we have security and we'll recoup our capital. But for the market, which doesn't understand how that process works, it's suddenly risk off, and I'm out until I sense that this is over, and then I'll be back. And so, we're in the process of going through that, and we spend a lot of FaceTime with our investors describing, what we're doing and how we're going about resolving the situation and how we think it'll work out. But it will not be until we actually get to the results and do, as you said, Graeme, do what we said we would do, that the true confidence returns. So that's an interesting challenge in public markets. And when we were starting the company, we knew we would ultimately have to be a public company because streaming companies get better multiples in the public markets than they would in the private markets. It was the right way for us to access the capital that we needed to access. So we've raised $111 million in our history, and we're growing. And we did $41 million in revenue so far this year. Things are going fantastically well, and we can self-fund our growth now. But we have this coverage from analysts who, every quarter they want to know the results. Well, and of course we have to give them. That's the legal requirement. But agriculture is not a quarterly business. It's what was on September the 30th? They want to know everything about the harvest, and what's the condition of the crop right here on June the 30th. Well, let's wait and see. And so when all those forest fires were going on last summer, we got all kinds of calls. Are these forest fires affecting your canola crops? Well, no, we don't grow canola in the forest. Let me show you a map. It's crazy. But this is. I remember. Actually, I have to tell this. The very first time we went to Toronto in 2005 to raise money for Farmland, there were a couple of meetings where we had to get out the map and say, okay, guys, here's where Saskatchewan is located. I mean, that's how bad it was. Things have changed a lot in the last decade. Saskatchewan's gotten its mojo back, and we're back on the national stage, and we've become a bit more of an economic player. So people know where Saskatchewan is, but still most of the bankers in Toronto haven't been there. And so this is a challenge for the sector. And some of you, I'm sure, if you're in the ag sector, you know that somewhere in behind your banker is a decision maker off in some other place in a dark room who read a headline that things are bad out west and lines of credit start getting pulled in and lenders get less interested in lending. And that's a regional challenge we have. Just a prognostication for the future. If you go back 50 years, the oil and gas business was nascent in Western Canada, and it was bankers that grew up, effectively locally, in Calgary at First Energy and Peters and Company. I think we're going to see firms like that emerge in the ag sector. Who knows where they'll be based? I'm hoping some will be based in Regina. Maybe I can play a role in helping some of that happen. But I think if I watch what's going on in agriculture, there are lots of opportunities, but there's a need to marry capital with those opportunities with people that understand both sides. And there aren't very many people like that in this country. So if you're a student and you're interested in finance, you're interested in management, and you come from a farm background, there's a ton of opportunity out there for you to put all that stuff together.
And they can start just by being an analyst, right? They
Sure,
could
give us a
walk in
call.
and say,
We're
I come
hiring
from
analysts pretty regular.
Right.